Hey guys, it's great to have you here. Welcome to Next Level, Time for Learning. Richard, happy to see you here.
Thank you very much.
Maybe you can introduce yourself to the audience.
Yes, my name is Richard Dennys. I'm the CEO of Webgains, which is an international affiliate network.
Awesome. What are we talking today about?
I think we're just going to talk about what on earth is going on over the next, what we see over the next 12, 18, 24 months. We're in a very turbulent time. Everyone's trying to guess what's going to happen with all these external and internal factors. It'd be good to talk that through.
So then let's talk about it. I mean, now it's the end of the quarter. We see the reports of the big e-commerce players. What do you see on your end?
So we're in an interesting time. I think what we saw for the pandemic in this industry, in the performance industry, was mostly positive. There was a big shift of mass market online shopping. People that hadn't really bothered to do Amazon or online shopping before were forced to because of the lockdowns. And then it created this almost like an artificial bubble in online retail. And everybody thought this could go on forever because we're such an optimistic species. We all think, well, the good times are here. They're going to go forever. And of course, literally as soon as the lockdowns ended and everybody started going back to work and everyone went back to the office and started shopping in retail shops again with the offers that they were offering, then the need to shop online diminished. And so all the people that are earning their money from their little percentages of those online sales started to feel the pain. So what you have to do is really go back to previous to pandemic levels and see where we were then. And then you can see there's a slight lift. But the glory days of, which is a terrible thing to say because of course pandemic was an awful time personally, then they're kind of over. And we're seeing now the hangover from the kind of performance marketing party that we saw. So many companies now raised money, did well, losing cash in the time, and now they're shedding staff. The Q2 results for most people in our industry have been pretty disappointing, and surprisingly so. The stock prices of all the tech stocks are dropping, and therefore the rationale to do the IPOs has disappeared. And therefore we're in this position where everyone's looking at each other going, oh, inflation's up, confidence is down, where do we go next?
I think you're totally right on that. I think we see right now, especially on startups, two kind of companies. I mean, mainly the startups also, they was using, mainly the startups, but also direct-to-consumer brands was mainly using paid social as the main traffic driver. So I spoke with a Facebook agency a couple of weeks ago, and he had quite interesting, way of thinking. And he's saying, David, there's two kind of shops. One was they never had a proof of concept. So that means they had a product that was not profitable at all. But they had so much money from VC companies that they spent to grow their user base. On another side, you have companies, they had a proof of concept. They was working profitable right now on Facebook, but right now also with the update of iOS 14, it's getting challenging. They have a lot of challenges right now. And both, let's say, kind of companies missed one part. The main channel was social paid. They dismissed totally the SEO part. So that means also on the side of the main channels that they use was paid channels. And that's right now one of the biggest problems that you see also in German markets. I think in the US and also in the UK, you had already the waves, but for us, it was quite a happy time. So that's right now the problem. Another thing that I see right now in the market, it's, a lot of companies are right now, European companies are selling to the US and to the UK and also to APAC due to the fact of the, let's say, strong dollar. Mm-hmm. For a lot of your citizens, it's so cheap to buy in Europe. And that's also what we can see in a lot of, brands and high fashion brands.
Yeah, exactly. There's a load of things in your point. You're absolutely right. And if I take one sector, let's look at the athleisure sector. So you've got the Gymsharks, you've got those kinds of people, all the D2C brands. They rode a wave. They rode a wave thinking, yeah, we don't need anybody else. We're going to go in our paid social, our paid media. We're going to do all the channels. It doesn't matter if we don't make too much money. We just want to build the brand. We see what Nike do. We see what Adidas does. We want to be those kind of brands, and everyone just buys on the basis of that. But I think what they may have made a mistake on is that they've gone into this kind of fashion vortex where we know millions of things. You and I, we've been around the houses a few times. We can remember brands that were shooting stars 1 minute, and then they become ubiquitous, and all of a sudden the market that you want to buy doesn't buy, and the market you don't want to buy you does buy you, and it's usually at the bottom end of the market, and therefore your brand is trashed. It's very difficult to get out of that loop. I mean, I look at some of these brands, people hanging around in the streets, and they look awful people, and they're just devaluing themselves. So anyway, my point is that they try to do this stuff. The paid media is very expensive and got more expensive as the supply shrunk, and so therefore their customer acquisition cost was high, their lifetime value is low, and when the money starts to dwindle and they can't raise the money that they were raising before, that's when literally the music stops and they have to get rid of people and costs. And we're seeing that now. That seems to be what's happening. In terms of the market sentiment, it's interesting when you compare the UK, US, Germany, Italy, France, Spain. I'm very fortunate that I travel around and I'm always listening. Somebody said the other day, "What's your job, Richard?" And I said, my main job is to listen, to see what's going on and to test the sentiment. The difference between Germany right now, and I said this, I was there a couple of weeks ago in Nuremberg with the team. I can tell a difference. I definitely sensed it. Germany's a very kind of confident nation. You can take from reunification, you had that, we're going to take this pain to reunify, and, we're not going to do this, and it's all in it together. And I sensed that when I used to live in Germany, a very kind of sense of national pride, which was the first time, I think it was the football tournament was the first time everyone waved the German flags. Yeah. And it was brilliant. And I was there when Germany won the World Cup, and I was in Berlin. I was literally there with all the crowds. It was amazing. I mean, really amazing. Now it's a completely different picture. People are anxious. They haven't been through the things that, look at Britain. We've been through financial turbulence, Brexit, which has just been a disaster, in my opinion, all these things. And we're kind of like, oh yeah, another thing. We're just going to get through it. We get through it. Whereas Germany hasn't had that. The manufacturers are worried about the price of gas. People are worried about their utility bills. People are worried about inflation and these sort of triple things that they're just not used to it. The confidence seems to have ebbed out a bit. And you look at the consumer confidence index of Germany, it's lowest it's ever been. It's still higher than the UK, by the way. So, it's an interesting thing from a relative point of view. But that's what we've got to deal with. People are the first thing they do is stop spending in discretionary points of view. So all your luxury items and your expensive holidays and all the things that we've all been buying, if we can afford it, for the last 2 or 3 years, are probably going to diminish. Businesses that aren't making money are going to hit the wall. And, I think you're seeing it, we're seeing it. There's definitely a lift in companies able to pay their invoices, or they're asking for credit terms, or, they're asking to reduce fees. So all of these kind of things are happening within the industry and around the industry. And it's going to be super interesting to see who's left at the end.
A funny thing was, I was reading, I think 2 days ago, an article in the Manager magazine about that topic. And I saw a post on LinkedIn from Breuninger that was saying, yeah, we are right now expanding to the Netherlands and I think Benelux. And there was a comment on the post, and it was written something like, do you think right now in the economic situation, it's good to expand in other countries? And then I was remembering the article from the Manager magazine that was referring mainly to luxury high brands. Like Louis Vuitton, Gucci, Balenciaga. If you see right now what happens there is, due to the fact that they are giving all the increases, to their customers. So the margin is still super great. And what you can also see is, they're gaining sales due to the fact that you already have, let's say, the new normal on the side of the pandemic. And you have a lot of tourists coming to Europe. And for them with the strong dollar, it's super cheap to buy luxury brands. So what you can see right now, mainly also on those brands, and that's also the main focus on Breuninger, is, it's scaling up the sales because, first of all, the audience is not so, how should I say it, affected from the increases of the prices. But on the other side, it's also right now cheaper for them due to the fact that dollar is, gained 20% in the last 6 to 8 months. This is something that you can see right now also on a global aspect. I think that's super interesting to see and can be a great challenge for a lot of brands in Europe.
That's very important. Very important. The export of these brands is, a lot of those are French or they're British, and they're still doing well. And the exchange rate between the US and Europe and UK is extremely strong. Therefore, everything for them seems to be bargain. Even if they put their price up 10%, to the Americans, it feels like it's a 20% discount. And that's a great story for export brands. But then if you're not if you're not a brand that's international at that level, because, China's going to have a tough time. They've got the real estate crisis. There's nothing else to say to crisis. And it's a lot of people that are not paying their mortgages, and there's a lot of bailout money that's needed that will hurt the Chinese market completely. And that will include some of these luxury brands and German cars.
Agree. I mean, we have right now a decrease on the sort of exports.
Which is the first time ever. I mean, that's just completely catastrophic.
Totally agree. Also, the prices in Germany and the sort of properties, everything is going up right now.
Except for growth. This is what we have. We have stagflation. We have stagnant economy and inflation, which is a pretty horrible thing to try and get away from.
But on the side of the challenges, I mean, we see a cleaning on the market. That means right now merchants are checking which channels make sense. We have an increase of acquisition costs and on the side of general costs. So right now they're checking where to spend more. And we see a decrease on the total budgets. That's also what you see on the side of the balance sheets of the big social players like Meta, for example. The acquisition costs are going high. What other challenges do you see in the next 18 months?
The inflation thing is the number one. There's two arguments of inflation, right? So inflation can be very dangerous. If you've got money saved, if you've got cash in the bank, then the value of that cash is going down and down and down every year. Not a huge amount of people have got very much cash in the bank. And if they had it, they're spending it right now on just surviving because of the cost of living. The danger is when the prices go up, everyone goes, oh my God, I want more money. I need more salaries. And then the salaries go up and that actually stays because inflation tends to be temporary. But if you give someone a pay rise, then that is a pay rise, right? It never goes down. And in the theory is if you give people more money, then they'll spend more money. And the whole thing starts to, push inflation up on a much longer level. So the challenges for business owners, I'm the CEO, you own your business, is to navigate that very fine line between keeping people motivated and happy that they're working with us and not struggling, but at the same time on a kind of national, international level, not stoking the inflation fire by giving everybody a 20% pay rise, which would be pretty ruinous anyway from a profit and loss point of view. There's a very narrow line. The biggest challenge we're all going to have, especially when you have a pretty tight labour market where everyone's offering jobs to everyone at crazy prices. That's the biggest national challenge I think we all have. And if you listen to the governments, they're saying, listen, please avoid pay increases, because once you put the pay increases in, then the inflation will take years to dissipate, if ever, rather than at the moment with the exchange rates driving a lot of the oil price, therefore petrol's expensive. The Russian and Ukrainian war is driving energy prices very, very high. But the perceived wisdom is that that's going to drop down next year. We're at 10%, 15% maybe this year, which is awful. But then the sort of perceived wisdom is things will calm down next year. It will go back down to sort of 5%, maybe under that at the end of next year, beginning of 24. And we need to try to kind of accommodate for those things. But that's the biggest challenge. It's keeping your team motivated. It's really hard.
I think one other important thing is to get your team motivated. I mean, right now, due to the fact of the high demand of jobs, I think it's quite important that everybody from us, it's trying, to work on himself and improve his knowledge and to be, the best person, and that is possible. I mean, I'm working every day. I'm listening to 20 podcasts a week. I'm trying to improve myself. I mean, I'm now in this industry for the last 14 years, and I can tell you honestly, I changed the business model of our company probably 4 times. And I think that's normal. And also, myself, again, every day I'm trying to improve myself. Every day I'm working. So I don't know if you can, adapt to the changes that this industry has from a van, or also think about, to be outside of the office. I know this is quite the new work, and I think, there's also a reason for that, but I think the most important thing to understand is if you want to learn something in this industry, and if you want to be long in the industry, what is your purpose also and your professional life? I see a lot of changes right now. People are moving from agencies to networks, from networks to merchants. And I think, honestly, this is also our responsibility. On the side also of, the Generation Z, that it's totally common to have internet everywhere. And I think also to explain them, hey, guys, what do you want to do? Is it that you want to, travel around the world and work from everywhere that you want? Or is it something that you want to be a leader of our industry and check also yourself, what are the next steps? How can I work on myself on a technology-wise? Or also on the vision, because this is what I'm doing mainly to see, okay, how can I improve myself? How can I improve the work of my agency? And I think also, how can I improve not only me, and I think there's quite a lot of people in our industry, they're thinking, okay, what are the next steps and how can I improve the industry and, gain the knowledge of all participants. And I think this is quite important for all of us. And we should also mainly focus on that and not only, to make money. I'm not saying, I'm a totally capitalist, but in the end of the day, we also need, to have an industry standard that we as an industry, can agree on that and work on that. And I think that's super important. Best example, it's tracking. Everybody's talking about server-to-server tracking. But also quite a lot of people in our industry they're super afraid about it. And I don't know why. Honestly speaking, we are working with server-to-server tracking since 14 years. I think since 2011. So we moved from pixel to S2S tracking. And I think this is the evaluation that we need to do. And we don't need to be afraid about it. We need only to accept the challenge.
Yeah. There's the same thing. But going back to your points about motivating yourself and looking after yourself, there's a generational divide, and there's probably 2 or 3 generational divides. We were talking earlier about how the last time we had negative growth in international industries was 2007 and 8. I had a travel business. I'd had it for 6 years. It was my baby. I grew it from literally nothing on a table in Italy to 5 million a year and investment and everything else. And Lehman broke, and we just lost everything. Literally lost everything over a period of 3 weeks. I had to stand in the middle of the office, apologize and say, your jobs are over and I can't pay you. It's just the worst thing, worst thing. And it wasn't just me. It was everybody else I knew. Everybody else had businesses. Everybody else had a job where I lived in Bristol. Over those 2 years, it was absolutely terrible. But most people that we work with in our companies were at school. They didn't go through that. So that's one thing. So nobody really knows what it's like. And that doesn't mean it's a bad thing. It's just a difference of perspective. The second thing is that we are, you're right. I work really hard. It's not competition, right? It's not some kind of an adrenaline competition, but I work every day. I work pretty much all the time. If anyone pings me, I pretty much always ping them back. And it's all about that. People say to me, oh, Richard, you're lucky to have such a nice life. I have a really hard-working life. I call it, I won the hard work lottery. That's what I did. I've literally been working since I was, 25, pretty much every day. My kids, I remember they were doing some imitations of their parents when they were little. And they were their mummy was all sort of preening and putting makeup on. And daddy was just sitting there on a keyboard. And that's just what they thought I did, which I still do. And people criticize me all the time because I'm always on the device. But I'm always listening and I'm always working, I'm always thinking. But that's different to people coming through in the last few years into the industry because they have totally different sets of stimulus. They have different sets of the messages they were brought up with. They can see everybody else. They can see everything else. And in the way that the Instagram generation are seeing everyone's perfect life, they're also seeing everyone's perfect job. And that isn't reality. So when they're in a business that they think, oh, this is a bit shit, or, I don't like what's happening here, they'll go online and they'll see everybody having a glorious time at their, company conference somewhere else and think, oh, my future is outside this company. And then they leave. And I've done that myself. We all did this early in our career when we were jumping around in our 20s, and that's fine. But it's difficult, so we can't sort of sit here as business owners and leaders criticizing because it's a different set of parameters. On the other hand, hard work does make success and rewards. And there's a narrative at the moment about, my work-life balance, which I find a little bit difficult. And maybe it's because I've been conditioned over the years to just work, fill my life for work. But it's like, I need to have a work-life balance and the inference is that work is bad. Work is a negative influence on you. Your job can be pretty rewarding. If you're in an office, you're meeting people, you're having conversations, it's stimulating, you have a routine, and most people like a routine. The working in a van thing's fine, and that's all right if you're sort of mid-senior and you can work like that. If you're a junior and you're coming into the industry, that sort of non-verbal communication that you get sitting next to each other in an office is incredibly important. The stuff, even people saying, what did you watch for TV last night? What did you have for dinner? What are you doing the weekend? Those sort of conversations you don't tend to get on a Teams call or a VM. They're all missing. And that's something that I think people are lacking for. And that's why there's a lot of anxiety around because you've got nowhere to share the way you're talking other than I'm moaning or I'm super happy. There's nothing in the middle. There's no boring stuff going on because that sort of stuff you used to have when you're sitting next to each other in the office has disappeared for 2 years. And if you've just come into the industry, let's say in 2019, 2018, that's half your career. You've been sitting in your bedroom or in your garden or in your van, not mentally developing, not physically developing. not falling in love, not having an argument, all those sort of things that are the part and parcel of real life that we would know it, have disappeared. So I think that's a really big challenge, is to try and keep everybody focused and motivated. And then if they are having the separation between work and home, which at the moment is almost impossible when you're working at home, then they can create another life that's somewhere else that their self-esteem is based. Because again, another thing was that you were only working at home. That's all you were doing. And therefore your self-esteem was lashed to your job, and you had nowhere else to do it. You couldn't go to a sports club. You couldn't go to shopping. You couldn't do anything else other than your social profile and your job. And I think that's been a very kind of polarized way of looking at things. And we're trying to get people back in the office because we're trying to add color back in. Even the commute is a pain in the ass sometimes, but at least you're with other people. So yeah, I don't know. That's the challenge.
I mean, if you continue our conversation, I mean, for sure, the social part in the offices. But I mean, something that is also quite interesting for me is, I mean, due to the fact that you have an international view and you have teams in different countries, do you see differences, I mean, on the side of tech knowledge? I mean, because I spoke, for example, with Alex from Global Commerce, and he told me, David, if you compare the US and the UK on the tech stack with Germany, I mean, it's super different. What's your opinion?
He thinks there's a lag.
Yeah.
A negative gap for German.
Yes.
Yeah, maybe. I don't know. One thing that I noticed, and this may have changed now, but when I first lived in Germany in 2011, 2012, 2013, was a sense of entrepreneurialism in the UK and in the US was far, far more developed than over in Germany.
Yeah.
And it was a number of things. And I realized that if you make a mistake in Germany, you're really dead. So if you go bust, you can never really come back.
Yeah.
It could be changed now, but there wasn't really the concept of a serial entrepreneur, because if you either sold it and that was great, but if you didn't, if you went bust, then you were kind of black marked and you couldn't come back. That's probably changed now. And I've seen a few people that have happened to, but it's not that common. And the other thing is the mobility of labor. People don't tend to move from Hamburg to Munich to Dusseldorf to Cologne. They don't tend to do that in the way that maybe I've seen a bit more of in other countries, or certainly in the US and UK, Anglo-Saxon as they call it. But that is a reason. The reason is quality of life is nice. If you live in the city, it's a pretty nice place. Germany is a lovely, lovely place to live compared to some other countries. It's a really nice place. And why would you rip yourself away from all your social contacts and networks to do that? Because work isn't the most important thing. But in terms of innovations, I also lived in Berlin when Berlin was really going and getting going, and that felt like good technology, but there was a big disconnect between business and tech. There wasn't much of a comparison, and that may have changed now. I don't know. Rocket Internet came in, and they were just doing all these incredible things, and they ended up with Zalando and all these other things that they were investing in, and the Groupon stuff. That was very exciting. So it's definitely there, but it feels like it's a Berlin thing as opposed to everywhere else. I don't know if that's true. I mean, there's plenty of networks now in Nuremberg and in Heilbronn and everybody else. There's been technical innovation. But is it as much as I see in US and UK? Probably not. And I don't know if that's a bad thing, because don't forget that a lot of that's funded by VC money, and VC money has been extremely free-flowing in the US, bounced into the UK. UK is very proud of its ability to raise venture capital compared to the rest of Europe. But then you could also take the other way around, saying that actually that's crazy business. And sensible business has remained in Europe, especially in Germany. It's a pragmatic nation. I love it very much. And they take a long-term view. A lot of German business owners are family-owned. They've been around a long time. They've inherited it from their family, and they don't want to mess it up. So that's you can understand that. You can understand that. So I don't think it's necessarily a bad thing. It's just taking a longer view.
Yeah, that makes sense. But you're right. When said that you fail, that's normal. Honestly, I learned the most of the time when I failed. And it's super tough to come to the office and say, guys, you need to leave. Because in the end of the day, you were still thinking about, you need to look in your mirror and say, hey, why that happened and why I was not seeing it. But on the other side, we also need to understand and think about it is, and that's what you mentioned right now, is the free money, or let's say, those times are over. I mean, only the interest rate in Germany tripled in the last 8 months.
Going higher. It'll go higher again. I mean, ECB will go higher. UK will go higher. US will go higher. It'll get to 5%, I think.
That's also the part that we all need to think about it, how we can make a scalable and profitable business.
But you can argue that's normal times. And probably the last 10 years has been abnormal. we're still in the defrosting from Lehman's, the GFC, global financial crisis. That's why interest rates went down, because was in a terrible time. And then it was supposed to then come up, but then we had the pandemic, so it went down again. But the actual natural rate for the interest rates is probably around 5%. It could be higher than that, it could be lower than that. And we haven't built a planned economy based on that. We built a planned economy based on free money. In some cases, 0%. And I remember having a lunch with somebody, a guy that worked for a Dutch investment bank in 2017. He said, we have $60 billion or euros or whatever in the bank, and we're paying negative interest. So we have to pay to keep that money in the bank. And therefore we have to invest it somewhere, because if we don't, it's going to cost us a fortune. And therefore with those kind of stimulus, they're spraying money everywhere on a big bet. And then as soon as that interest rate comes back up again, they stop it. The supply of the money into the markets changes. And then we find what we're seeing now, which is everybody's now replanning a future where profit actually does matter. Cash flow actually does matter, as opposed to this really big race to the top line and winner takes all, because that's just such a destructive way to try and win a market.
So, and if you see now, what are the challenges on the side of tracking for a network? What is the outlook that you see there?
Yeah. So I talked about this yesterday in another video I did internally. At the end of the day, privacy is the right thing. Privacy is something to fight for. If you lose the right to your privacy, then you're in, society's in trouble. You need to be able to do your own thing. So that's the basis of all these changes. Whether the GDPR has gone too far, I don't know. I mean, the big battleground that seems to be still, what's personal information, what basis are you allowed to track on, whether that's legitimate interest or full consent. Those are still being wound out. And in the meantime, companies are being fined. They've been fined for not treating it the right way. And usually it's American companies. It just tends to be, although we saw Criteo last week with a $65 million fine for not getting consent effectively. These are big hurricanes that were around our industry, and therefore everyone's slightly scared of it. The browsers are slightly scared of it. Apple is now saying it's actually a battle line for us. We want to make sure it's privacy or nothing, and therefore we're going to really shut down the ability to track anything anywhere unless it's under full consent. Which you think actually, if you step back from our industry, you think, well, it's probably the right thing to do. But there's a cynicism in there thinking, actually, are you really doing this, or are you just doing it to annoy Google and kill Google? Because of course, Google is their lifeblood. And then, as we were saying before this session, they've now kicked into touch the third-party cookie banning until 2024. And then the IAB TCF thing, that's also 2023, 2024. So everyone's pushing into this as far as they can. But we're all in the industry, we're doing our best to do our best. Tracking is becoming more of a challenge. I think, is that a good or a bad thing? It's a challenging, and challenge, what is it? Invention is the mother of necessity, or the other way around. When you have tough times, that's what breeds innovation. And I embrace that. I think it's interesting. It shows you, it gives an advantage to agile businesses. So if you're a big business that's in every market, in every sector, in every, and all of a sudden you've got to switch around, that's very threatening to you. Webgains is a business that we've tried to keep very agile. We've never had one big client that's bigger than everybody else. If we do, we don't keep them very long. We've never had one sector that we're particularly into. We haven't invested in every single type of technical tool you can imagine. We've kept our tracking very light. We've always been iterating it. So, for us, we see it as an opportunity, definitely. It's a challenge. And you and I talk about this all the time. And we've got a kind of umbilical cord now to talk about tracking. And that's brilliant. And I really, really appreciate it. We will get through it. I don't believe it's existential. I think we can survive it. I think we can thrive coming out the back of it. There's a kind of level of fundamentalism around privacy that might dissipate a bit. I don't know. There's a lot of business out there that's not trading on the correct way, so they're not getting permissions. I think performance display as an affiliate type is under threat. I think that's a challenge. We've seen that before. We talked about this. There isn't consent there. You don't really know what's going with that data. But like anything, affiliate has always done really well because it's such an innovative channel. There's always people like you, people like some of our technical guys, people like Webgains. They're always focusing on slightly above the horizon. I call it second horizon, which you talked about earlier. Always thinking about where's this going to go and then innovating for that. There's always a way through. And so, like I say, I embrace it because I think for a company like Webgains and you guys, we'll probably be the winners because we can be agile. But it is a challenge, at the moment, are you tracking a conversion path from start to finish? No. And what does that mean for merchants, it means initially, hooray, I don't pay commissions because you're not tracking it. I'm just going to get the sales anyway. But in the long term, the affiliates go, well, I'm not going to work for you because you're not tracking my sales. And therefore, it hurts your affiliate mix. And that's the big challenge.
Yeah, and also the problem that you see here, also on the side of the merchants, maybe they are happy, but they can't track it properly to know on which channel do you need to spend more.
I've got a great example of that. I'm not going to mention any names, but we've got one client who is working with performance display. It's a sub-network, actually.
Yeah.
And I asked for, they're going to know this because I asked for the Google Analytics so I could have a look. And you can see that the ports weren't quite set up properly, but they've got it. The cookie tracking tracks fine, right? So you can see that through, and it pretty much matches our numbers. And then we have the fingerprinting, which is device IDs and all those kind of things, obviously under strict GDPR. And then you have the impressions, and the impressions are massive. I mean, they're massive because it's like tens and tens of millions of impressions. And then you do the analysis, and it shows that actually, from an affiliate point of view, those tens and tens of millions of impressions aren't translating to anything. They're translating to 250 euros of sales or something. And therefore, for us, it's translating to, I don't know, 30 euros. So we said, listen, guys, we're gonna cut that down. We're not going to do that. Our server costs are going to cost about 100 times more than we're making. There's no chance that we're going to carry that on. So they're like, okay. And then you turn it off, and then they go, where's our impressions gone? And I'm like, well, yeah, listen, okay, you might be making sales from the impressions through another channel, but not through affiliate. So why are we serving this for you? It's not going to work. Can't do that. So it's funny. So you kind of say, okay, well, we're going to stop the fingerprint or device ID or the sub networks because no one's making any money. And then they realize they switch them off, and the incrementality drops to nothing. They're like, whoa. So someone somewhere is doing something that's not getting recorded. And we've got to work out, you and us and the industry's got to work out how to combat that.
There's also the problem on the side. I mean, you look at numbers and then you cross-match them with other tools, and then you think about what should I do then? Also back to the e-privacy and privacy. The privacy is super important. But I had an interview about that, and the main thing here was I understand it, but I think what we also need to understand here, it's the knowledge of the end user. Does the end user understand that internet sites are making money out of the data and of the user? And how do they make money out of it? Because this is right now the problem. I mean, we have right now on the sort of GDPR and e-privacy a framework.
But it's the rules. It's the rules, right? And going back to the German market, the way that they look at life, it's the rules, right? Yeah. You follow the rules. Whereas in Britain, we're like, okay, well, we'll get away with this. And in America's like, whatever, technically sue me and I'll do everything. But in Germany, the rules are the rules. And that's good. I like it. The fact you live a life and it's quiet at night and in the morning and you can't do things at the weekend and all those kind of, it's the rules. And GDPR is the rules.
And in the end of the day, you need to understand the rules. And that's right now.
But the pragmatism isn't there. So the pragmatism is missing slightly.
Yeah.
It's not criticism at all, because, it's the best of Germany life. It's the fact that you have the rules. But GDPR, and basically our approach to GDPR, Webgains is headquartered in the UK. We're owned by a German business who is listed on the German stock market. And therefore, we have to take the German rules as our rules. And in the beginning, we fought and said, no, this is rubbish. I'm not doing this. It doesn't make sense. It's not pragmatic. As time's gone on over the last 2, 3, 4, 5 years, it was the right thing to do, because now we are super clean. We are super clean. To the detriment of some of our business, we've had to lose clients because they wouldn't sign our DPA. We've had to literally resign business because of the rules. But as it turned out, as we pop into this era, we are now not having an argument about whether it's consent or legitimate interest or whatever it might be. We are confident and clear going through to the future, as opposed to a lot of the rest of our industries like flailing and going, maybe we will, maybe we won't. We're just going to wait for the legal precedents. So I think, so that's from a kind of overall point of view. And then, day to day, the other problem is Google Analytics. Google Analytics is a free tool that everyone's used. We've all been sort of sucked into this amazing thing, free set of analytics that Google provides for one reason and one reason only, and that's to make you buy more Google AdWords. That's what they want you to do. It's a Trojan horse of a product. And even now, they've moved now. So GA4, because of the privacy issue, they moved into GA4. It's much more complicated. They're not even, the default position is now no longer last click attribution, it's data-driven attribution. So they're not telling you how that works. So it's going to make it worse. And if you are taking your e-commerce seriously, you might be paying thousands for your network, thousands for your paid media, but you're paying nothing for your attribution system. You're paying nothing for Google Analytics. You've got to make that switch. You've got to buy a professional system you're paying for that actually can track properly.
Or you have high volume, then you need to pay for GA,
Yes.
but then it's so ridiculous expensive.
Exactly, yeah. There's a whole new class of these tracking systems that are coming into the market, and and that's a good thing.
On the other side, also the changes with GA4 will change a lot of things, and it will not make it easier. I think the whole data-driven stuff will make it more complicated, and it's a black box on the side of Google.
Yes, exactly.
I mean, we see it right now also on our side, on our tracker. You know, we are also trying, I mean, we're discussing with our clients every time, hey, why do we have other numbers on our tracker than on GA?
Yeah, we have every network has it, everybody has it. We're all going through the same problem.
And that's something that we all need to consider. How can we educate people that they understand that there is slightly differences and that's okay? And how can we calculate that in our marketing mix?
Yeah, that is a huge challenge. It is for us, but it's very, very challenging for an e-commerce manager or somebody on the client side who are managing these campaigns. Because don't forget, we all we see is performance marketing. That's what we see. When you're on the client side, and most of my career has been on the client side prior to this, you've got your own team, you've got other channels that you're competing with, you've got your finance department that you're competing with, you've got the overall P&L that you might not even be aware of the company that you're competing with. So there's all these things, and everyone's saying, look, prove to me your ROI every single time. And then the finance director will come in and say, what's this affiliate stuff? You know, it's costing us a fortune. You know, that's the thing. And then we get the call saying, the finance team think we've gone through the budget. And you think, what do you mean gone through the budget? It's 20-1 ROI. How can there be even a budget? You should be just literally open-ended. But of course, businesses don't work like that. They work on planned and they work on forecasts, and you know, they'll look at the revenue over in one part and they'll look at the marketing spend on another part, and they don't connect the two together. So that's hard. So that's why Google Analytics is free, because everyone goes, yeah, we can use that. It doesn't cost us any money. And that's now why my finance director, my finance director has looked at the data and doesn't understand what it is, why are we spending so much on affiliate. And that's the education piece that I think we all need to do, but not just from our point of view, from what it's like from a client's point of view. How to convince your CFO that affiliate's working, it would be a great one.
Agree. I can remember ages ago, I mean, we had the tax inspection, and I needed to explain tax authorities about my business model. And back in the days, I was a merchant, and I mean, they didn't understand it at all.
But we're audited. You know, we have to explain it every year.
And I can remember the only question that I had is like, hey, this is the way how you make money. That was so surreal for them. And I think this is right now also the problem in our industry. I mean, everything that is related to performance marketing, and I mean, affiliate marketing is a subcategory of performance marketing. How can we explain people what we are doing? And I mean, that's on a whole supply chain. That's the problem on the side of the merchants. If you have somebody there that is not understanding the business model of a publisher, then he's not getting it. But it's the same if you have a problem on the side of the network and you need to talk with a network representative and he is not, I mean, totally in of the technical side. And that's the same on the side of the merchant or on the side of the publisher. I think, I mean, that was also what we spoke about before. In the last years, it was like Hanukkah for everybody from us. So we was hiring and trying to pleasant our stuff. But every time when we have any conflicts in our industry, how to protect ourselves on the side of the incrementality of our channel, this is something that we need to explain to against everybody. And I think this is right now one of the biggest challenges. And right now in the situation that you have also a CFO on your back that says, hey, please cut costs and we need to see data and we need to prove it on numbers. And then we are not able to do that. This is one of the biggest challenges that we have right now in our industry. And everybody needs to work on it.
That's also a challenge in terms of the data management. You know, we only see really one channel. I can see the data from my affiliate. We have some basket data, which we can and can't use much of, but you know, we can just see us. We can't see paid search media. All we can do is look at a third-party system that they're looking at, and it will tell you, actually, we think the shares this, that, and the other. But it's still very badly probabilistic. You know, it's not, the probabilistic approach now is still just emerging. It's just not very intelligent. I know there's lots of things out there that will say, yeah, it's AI and ML driven, this, that, and the other. We're still at the early days. It's just not smart enough yet. So you know, with Webgains, we've got this thing. Our positioning is around to be as smart as we possibly can. We've got the academy, which is driving the sort of education of our people, whether that's physical or digital. We've got 3 AI-driven tool sets, which is the affiliate discovery, dynamic commissioning, and product discovery. They're very technical, but they're all designed to make an affiliate manager's job a lot easier. We want to take all that sort of very smart stuff off their desks, really. And the next frontier really is smart attribution. And that's something that we really do. But because we're in one channel, it's very difficult for us to do that ourselves. So we're talking at the moment about APIs, so we can push out our data into these smart attribution systems, then bring them back through a system of reportings that, because it just takes away the guesstimation, it makes probabilistic look like it's deterministic. That's the big challenge for us, is to make sure that accuracy is good with a sort of one eye blind and one eye seeing approach, where we can't see all the other channels. We can't see Google in a system that Google is trying to promote in terms of, or Facebook or whatever it might be, TikTok or Snapchat, LinkedIn. That's the perennial challenge.
I mean, the good thing on our side is we have mainly GA access. So we had yesterday, for example, a call with Samuel, and, we was checking the numbers on GA, and I was delighted from his knowledge. The good thing also here is...
Well, Sam's been on the client side. Sam was on the client side for a long time, 11 years before he joined Webgains.
Okay.
He was on the client side with a merchant. So he understands what it's like. That's why he's such a fantastic CTO for Webgains, is that, he's got that opinion. I've worked with many CTOs and they've all been fantastic in their ways, but I've not worked with anybody with such an understanding from a client side than I have done with Sam.
I mean, everybody needs to go out of a silo. We can't say anymore, we're only focusing on affiliation. Because right now, also in this situation with attribution and tracking and data-driven parts, the user journey is longer than only one touch point. And now the most important thing is, and this is also what we see right now in the last 2 years, is since, the iOS updates, the acquisition costs are going higher and higher. And nobody has...
But weirdly, the commission rates are going down on affiliates.
Yeah, for sure.
So it's the other way around.
And the sad thing, honestly speaking, and that's, our part, because everybody's mainly talking about low funnel loyalty, and, everybody's thinking about, hey, affiliation doesn't have anything else than recycling my clients. And that's not true. We have the mid funnel, we have the top funnel, and we as an industry needs to step up and say, guys, there are possibilities to use these channels on affiliation. We only need to show them how, and also change our mindset.
That's the thing about innovation,
Yeah.
So I've talked about last click hijack for a few years now, and there seems to be this, when innovation has come along, it's been in the browser toolbar stuff, the toolbar voucher providers. Microsoft now do it in browser. You've got the buy now, pay laters that are now all of a sudden they're affiliates. They're literally trying to hijack the last click because we're rewarding it. It's like anything, it's like, having Bella the dog, you want her to do something, you give her a reward. And so we're rewarding last click. We have done for a long time. Yeah. And that's why it's very important that we reinvest in the top and mid funnel affiliates. Very, very important. That's why we have affiliate discovery, because we're trying to bring in all these long tail affiliates, the contents, and then trying to think of a way with our smart commissions that they can get rewarded. And the product discovery is designed for these little guys to say, actually, I've only got 4 ad units. What shall I promote? And we have this 26 million SKUs ordered by our own algorithm, so they can see what they should be promoting today. So the idea is really to democratize that long tail on both sides of the merchant and affiliate mix. Other networks are completely different. They want the high stuff, the tier 1 merchants, and they want the top 100 affiliates. That's fine, but it's not defendable. You can't defend that from the likes of the disruptive innovators, which we're seeing right now. And that's why they're struggling, because their battle line is mixed, and it's easy to defend on price only. That's pretty much what it comes down to, whereas ours is on innovation. That's the difference. But the long tail, mid tail, upper funnel thing is really hard. But
it is.
But the hard is good, right? We choose the hard route. If it's easy, then everyone will do it, as they say.
Yeah, that's also something that we see in our acquisition process. We are modifying them every 2-3 months. Sometimes we have a proof of concept, sometimes we're not, and that's getting mental. It's super intense with our stuff, but that's the part. And that's the only challenge, how you can increase the payouts again. I had yesterday a pitch, and it was super interesting. The merchant was saying, yeah, we are doing affiliation in the US, but we're not doing affiliation in Europe. I mean, that was a high fashion luxury brand from Germany. And I was asking why you're not doing affiliation in your home markets. And it was like, yeah, due to the fact of the negative implicity of the channel.
That's so funny. You hear the Americans saying, we don't do affiliate because it's just full of fraud. I mean, they say that all the time. And now you're saying a European merchant's doing the same, but they'll do it in the US. It's way worse.
And I mean, so what do you mean with that? The whole topic with couponing and cashback and getting the last click. We as a brand, we need to be careful. And I was like, okay, But there's so many opportunities for this channel. The only thing that you need to do, yes, maybe you need to pay a fixed fee, but you need to calculate it and make a business model out of it.
That's a buying signal. I'm a sales guy, right? I was trained I was literally knocking on doors selling insurance when I was a kid. When somebody says an objection like that, that's saying, all this sort of stuff, commissions, last click, you then say, well, we've got all these tools that get you around that. We have the solutions for those. Trouble is, not many people are using them because they don't understand it or they haven't got the time.
And yeah, that's one of the part of. And on the other side, if you use them, then it's hard work.
Yeah.
Because I think...
But then that's why you manage network, because you've got, or an agency like you.
Yeah.
We've got account managers that are skilled in doing this, and so have you. And if you're trying to do it yourself with your own sort of in-house private network, that's really hard. Really, really, really hard. And you look at the iterations, and we see this, you've got somebody that goes in, they're a marketing manager, very talented, very ambitious. They think, okay, I'm going to cut my costs. I'm going to bring in a platform, bring it in. They go, I haven't got time for this. We need to grow. So then they bring an agency, and then they look at their ROI and go, actually, this is expensive. Then they start talking to networks. So then the network comes in, and then somebody else comes around and goes, oh, no, we're going to change that again. But the sort of cost beneficial of doing that, people don't understand how much time you need to spend on affiliate marketing. It's not one of these things you can click and go. You need lots of people driving relationships with your affiliate partners, working out the text, the systems, the attribution. There's just such a lot of work to do. As Q4's coming up right now, it's the busiest time of the year for everyone setting up their Q4 campaigns. And there's still clients out there going, oh yeah, we're going to leave it a bit. We haven't really done our plan yet. It's like, what are you talking about? This is when you have to start your media now. You should have done it in June. It's late. People coming on to affiliates saying, oh, well, we've got a few more weeks before Q4. We need to go live. It's like, no way. You should be live now. You should be building your campaigns now. We're a wind-driven industry. It's a passive industry. You can't just switch it on and off. It takes ages to.
That's the funny thing. A lot of people saying, also in the pitches that we have, my affiliate marketing is running on autopilot. And then my question is, what do you mean on autopilot? And they say, yeah, we don't do sales clearings. And after 6 months, they're checking it and the bills are growing, and then they're checking it. And then they're saying, yeah, it's fucked. Honestly speaking, would you start a Google Smart campaign, and run it for?
Well, people do. And that's why Google makes so much money. They make money. I met a guy years ago and he said, we make all of our money from 95% of our business that doesn't know what they're doing. And then there's 5% of businesses that know what they're doing. We lose money on that media. So, the high spenders don't make money, but the long tail of everything that don't, the uninformed buyers that's their profit center. And
that's also one of the challenges that we need to force. I can remember on the tactics, everybody was talking about, the full funnel. And it was great, but everybody was mainly focusing on native and display campaigns, so everything related media buying. That's one of the part of the top and mid funnel that you can use, but let's think also about other channels that you can use in affiliation. One big topic is commerce, one big topic are blogs. How can you acquire publisher in the top and mid funnels? How can you use Telegram groups? And I think this is also one of the responsibilities from us to work as professionals in affiliate marketing on those channels. And another topic that you can see every time in Germany is, how we need an incentive for the end users. I think, one of the first, brands they started was, Guides the Sky for MediaMarkt. And right now it's mainly about how can we, make it more attractive for the client? How can they save more money? And that's also the part on the side of some commerce partners. And I think if we have a value of a brand, we don't need only to talk, and work with the marketing instrument of the price. We also need to think about how can we explain the USPs? How can people, be happy to buy it for full price? And that's also something that we need to learn. Best example are the wine deals. You get 15 bottles of wine, 5 glasses, 3 additional bottles, and that for 50% less. What is, this price implicitly to you? It's only cheap.
But that's all based on, sorry to go back to that model, that's based on inertia marketing. So you get people on signed up with a credit card and then they forget to cancel it. You have it in dating, you have it in wine, you have it in loads of subscription models. And it becomes too complicated. And that's not a great business model to be building a business on, in theory. We're all deal whores. We'll go where the money is. If there's a discount somewhere, we just hunt them, and then we never use that company again. Groupon was always the pitch to little businesses, was saying, look, you're going to get one person in, you pay us for that, but then everything else after that is profit for you. But that never happened. They were always the people that were going to shift around. So if you're marketing to those people, then you're never going to get long-term. Well, you might do, but it's a very, very small percentage of people that will stick around. Because who wants to pay full price for anything?
Totally agree. Richard, we can talk about ages, and I love to continue with that.
I just want to say, the thing about the affiliate niche channel, whatever it's called, is fantastic. I fell into it by mistake, 2016. And before that, from a client side, it was always that kind of the little channel at the end that nobody really understood, and it did some money. And if you were a publisher, it was the one that never made you any money. But now I'm in it. It's a wonderful, wonderful industry, and there's so many facets to it. So you can build a whole career in it. We are going through turbulence, but I think people need to think that it's positive, not negative, and just think slightly longer term, and then we'll all be fine.
I totally agree with that. And that's a great last word. Richard, thank you for your time.
David, thanks very much.
Bye-bye.